MultiversX has been hit hard by this bear market, but is it on pace to thrive in the next bull market? Let's discuss. So hey everyone, welcome back to Upside Down Data. Today I want to give a fairly comprehensive overview of MultiversX in terms of where it stands currently, in terms of things like its tokenomics, its technology, and its adoption, then talk about how those factors might feed into what we might think EGLD could be looking like in the future. So before I get into all that, I do want to just say up front that I mean this to be an objective and an impartial assessment of what's going on with MultiversX right now. I'm not going to tell you what to think. I'm not going to tell you if MultiversX is good or bad project. I'm going to let you make that determination for yourself. What I want to do is talk about some factors that I think are important to pay attention to, both with MultiversX and frankly any altcoin out there, any especially layer 1 blockchain that is out there. So let's go ahead and get started. Let's talk a little bit about tokenomics. So something that I feel like is often ignored in crypto, often to people's expense, is the supply of an asset, specifically the rate of change in that supply. How quickly is the supply for the asset inflating, and how is that supply different from where it was in the past? And so I'm showing you here on Masari is the circulating supply for EGLD across its history here. And you'll notice that there's been a pretty large growth in the amount of circulating supply that's out there. We're up at around 25.7 million. This data here starts with it at around 13 million. So over a 10 million EGLD increase in the amount of supply that's circulating and is out there. And the reason that we care about this is that price at its most basic form is determined by supply and demand. And so the idea would be that for increasing amount of supply that's out there, there would need to be increasing amounts of demand to get price back up to the same level. So another way of thinking of it is that for price to get back to its all-time high price up at around $500, we would now need to see, now that supply is higher than it was over there, we'd actually need to see more demand coming into MultiversX to get us back up to $500. So that's one of the reasons why it's important to watch this. And you'll notice that the dynamics here are interesting. You'll notice this stair-stepping kind of behavior and also this kind of steady growth. And there's a very clear explanation for why it's gone like this. These stair steps you see here are just simply a part of the vesting schedule of the token unlock. So on the website, MultiversX, their website, they have a link to this spreadsheet here where they just show all the different unlocks that happen throughout time. Now, the good news is that the final unlock that was scheduled has already happened. You know, this final unlock here back in January of this year to the team, that was the last one here. And so all of the unlocks that are going to go to early investors, the team, advisors, the protocol treasury, etc., all of that's already happened. So these big, massive unlocks here, these big steps up are behind us. And so really what's all that is left then is this slower inflation that we're seeing here. And if we just look at the current staking rewards for EGLD, we can get a sense of what that inflation rate is. Currently, it's just under 9%. So you can see that someone running a validator can expect a APY of about 9%. And basically the idea there is that is the inflation. That's new EGLD that are being created, given to validators as part of this. Now, not all of this is that. Some of this will be transaction fees. Talk in a minute about how transaction fees are probably not high enough to offset much of that. Most of this is likely to be new issuance. And that's really what we're seeing with this steady increase here. So one of the things that's interesting to keep an eye on then, and this goes back to what we're talking about with transaction fees, is that the way that the circulating supply dynamics, or the max supply specifically dynamics for MultiversX were originally set up, was this kind of setup where you'd have the minimum max supply you could have would be 20 million. The maximum supply possible that you could have would be this value here, 31,415,000, etc. If you're curious why this number, this is actually the digits of pi just shifted, so 3.14159. That's all digits of pi, so that's why this seems kind of a random number, but it's actually just pi. This would be the max possible supply that could be out there. But then in terms of what will actually end up being the max supply, it's going to depend a bit on transactions on the network. And the idea is that the more adoption, the more transactions that happen on the network, the more that actually new issuance will be offset by those transaction fees. And then you'll never actually get to that full possible max supply that is this value here. And so the idea is that you want to watch how many transactions is EGLD performing, and the more transactions that are happening on the network, the more transaction fees there are, the lower this max supply will actually be in the end. Now we can look at this, and we can look at this more recently to see, what is the current transactions per second and how much should we think that this is offsetting the inflation to lower that max supply. And currently the number of transactions per second, obviously there are transactions happening every day. That's what I'm showing you here over the last month. 300,000, 177,000, etc. The highest of the last month was 520, and then down around here, 197 was the more recent one for today. Between these, it would be somewhere between 2 to 6 transactions per second. If you just take these daily numbers and then just convert them into seconds, it'd be somewhere around there, 2 to 6 transactions per second. It's obviously not nothing, but it's not a ton. And so basically the idea would be that if we're expecting max supply to end somewhere, unless EGLD gets a massive influx in more transactions per second that are happening on the network, we're probably going to be closer to this number than where we are currently right now. I think there's a decent amount of inflation that's probably still to come. Because if you just look at these number of transactions, you look at the average cost of transaction on the network, which is about 0.001 cents, and you just do the math, that's only going to be about a daily rate of about $520 or so on some of these, which is not a whole lot. Now, obviously, that's probably a low end, because depending on the transaction, some of them will be more expensive, the more computationally intensive ones. So it's probably a low end. But still, regardless of that, that's not offsetting a whole lot of that inflation. And so that's why I would expect things to kind of cap out more on the higher range rather than the lower range. So obviously some people aren't going to be happy to hear that, but that's just the way it is. Currently, the network is just not getting enough usage for us to really be thinking that the transaction fees are just going to be able to fully offset inflation or new issuance of EGLD to compensate validators. So that's what I would be kind of expecting going forward. If you have a different opinion, that's fine. That's just what I'm seeing when I look at the data. So if we think then about tokenomics for EGLD, what I will say is that this inflation, though not nothing, and though quite a bit has been added, it's almost doubled since September 2020 up to today. The number of EGLD that are in circulation has almost doubled. This is actually not as bad as some other L1s that are out there. And this is really the story of a lot of alternative layer ones, especially ones that launched in a similar time frame to EGLD, where really what happened is that a lot of them had unlock schedules because they had early investors, there were teams, the team would be getting it, they'd have a treasury, etc. So there'd be a lot of kind of early inflation that would happen throughout this time. And in addition, a lot of other layer 1 protocols just really haven't gotten enough adoption for their transaction fees to offset inflation. So a lot of them maintain relatively high inflation rates to compensate validators and keep them incentivized to be validating on the protocol. Really, Ethereum is probably the only layer 1 blockchain we can look at right now where transaction fees on their own can be a viable, kind of sustainable thing. And obviously, transaction fees are a lot more expensive on Ethereum than a lot of other alt L1s. So when I look at this, I don't think that EGLD really stands out as being an outlier in this. It's just something that's still important to keep in mind. Just remember that the circulating supply of EGLD is almost twice as high as it was back in September of 2020 as it is right now. And so when you think about prices that EGLD could reclaim in the future bull market, just remember that we're going to need more demand for the token to get us back up to the same prices compared to where we were back here and back here, where we had a lower number of circulating supply. But the good news is that the vast majority, no matter what the max supply ends up being, even if it ends up being the max total value, we've still already seen the majority of circulating supply hit the market. So any kind of increase in new EGLD hitting the market, increase in circulating supply, will be smaller necessarily than what we've seen back through here. And so the worst of the inflation is behind us. And we won't also have these big, massive unlocks at one point in time like we did in the past here, which will also help keep it a slower rate of change, which then might have less of a notable impact potentially on price. So a few things to keep in mind there. So the next thing I want to talk about then with EGLD is technology. Obviously, technology matters with these protocols. I think a lot of people who are into MultiversX, a lot of the MultiversX bulls out there, I think a big reason why they are is that the technology is quite good. It's a sharded layer 1 blockchain, and so that allows it to have really high scalability, estimates of 15,000 transaction per second capability, as I mentioned before, really cheap transaction costs, which is also beneficial for these protocols, makes it a lot more enticing for especially retail to use it versus something like Ethereum, which tends to be quite expensive to transact on. And then also something that's also notable, or something I should mention about MultiversX, is that it uses its own virtual machine. So the virtual machine is basically the way that it does things like smart contracts and all of that, the programmability aspect. And a lot of other chains use the Ethereum virtual machine. Obviously Ethereum uses it, and a lot of other computing L1s also just adopted the Ethereum virtual machine. And so there are pros and cons of having your own virtual machine versus just using the EVM. The benefits of using the EVM is that it's something that a lot of people are familiar with. A lot of people program in Solidity. That's the programming language used for the EVM. A lot of people are familiar with it. And so it's really easy to get developers in because they don't need to learn a lot of new skills to move over into your ecosystem. They can just take their Solidity skills, even take smart contracts that they've been working on in those other EVM chains, and just come right over into your ecosystem. So it can be quite easy to bootstrap new protocols because people aren't having to learn a bunch of new things. But the downside of something like the EVM is that it's not always the best for the given protocol. If you have your own virtual machine, you can really tailor it to your blockchain to make it more efficient, more scalable. And so there's some benefits there as well. And the other thing that also can be a benefit is that developers who do decide to deploy to your protocol using your virtual machine are less likely to just leave if some other chain is out there offering incentives, because they would have to totally change the way that they're programming their smart contracts. Most likely they might have to learn new skills to do that. It's just too hard. And so you're more likely to have your developers stick around in your ecosystem if they've been learning your virtual machine versus one like the EVM that's used by a whole bunch. So there are pros and cons to each one. One other thing that's nice about the MultiversX virtual machine is that you can use multiple different languages to program in it. It's not stuck to just one. And this is a benefit because if you look at some chains like, for example, Cardano, that uses Haskell, which is a language that has a reputation for being very difficult to code with, very difficult to learn. And so it's a lot harder potentially to entice people into your ecosystem if they think it's going to be really hard. Why wouldn't they just go somewhere else? Well, maybe just even use a language they might already know, like Rust or C or C++, C#, etc. And so that is another potential advantage of the way that MultiversX has done it, is that they do use their own virtual machine, but they at least make it easier than some other alternative layer ones to get into that ecosystem. So that is a piece of technology I think is important to mention, because really that's a big differentiator between a lot of layer one chains right now. Do they use their own virtual machine? Do they use the EVM? MultiversX uses its own. So I'll let you make a determination of which of those is better, but those are the pros and cons and some things to think about when thinking about the technology. So I'm not going to spend a ton of time about the technology because frankly I think anyone familiar with MultiversX has already gone into it. They already know what's going on. Just wanted to briefly cover those few points. I wanted to then move into adoption, which I think is one of the most important aspects for a lot of these alternative layer one blockchains, especially as we go through the bear market and get closer to maybe the next bull markets. Which ones can actually get a lot of adoption and usage of their network? Because these are networks, and networks ascribe value or gain value by getting bigger, by growing, getting people to actually be using them. So MultiversX, they have a roadmap on their website, and a number of the things on here have already been completed, and they have a few more things that are coming up at the end of the year. I wanted to focus in on one in particular that went live back in the beginning of the summer, earlier in the summer, that I think is particularly interesting when it comes to MultiversX. This is X Money, basically getting into the payments space. And I've actually talked about this before in the context of MultiversX. And so what's interesting about the approach that's being taken here is that basically they're trying to build out infrastructure both for crypto payments. So that's what this is, crypto pay, to basically allow merchants to more easily accept crypto payments. And one of the things I think is really cool about what they're doing here is they're actually allowing merchants to accept payment in crypto, but then actually get paid in fiat. So you're accepting crypto from your customer, but you yourself are getting fiat put in your bank account, which is probably something that is necessary, at least in any kind of transition into making crypto payments more common, is that most merchants just aren't going to want to deal with crypto. They're not going to want to deal with setting up a wallet or dealing with all that hassle, but they might want to accept crypto. There's some advantages. One of the big advantages of crypto payments for a merchant is that they're not having to pay fees to things like credit card companies. Credit card companies take pretty large percent cuts of every transaction that they process. It can be 3% cut on every single transaction. And of course, that's something that the merchant is just losing, that the customer is paying X amount of money, and then the merchant is losing 3% of that straight off to the credit card company. And so for merchants, there are a lot of things about crypto that could be quite useful. The other thing that's nice about crypto is instant settlement. So with a lot of current systems that's for credit card payments and things like that, merchants actually don't get that money hitting their account right away. It can actually take days potentially for money that was paid in a transaction to actually be made available to them to spend. And it can be quite useful to have quicker settlement so you have those funds immediately available for use. And that's something, again, that crypto would enable. That if someone pays with crypto, it's instantly settled. It's instantly there. So there's some things that I think are interesting in that space. And the reason why I wanted to focus on payments is that it's a sector where the fit with crypto is very obvious. It's right there. We're not having to search for some new use case and then hope that people come and want to use it. We know that payments will always be happening, and we know that there are efficiency advantages for crypto above the current system. And it's especially something that merchants would like. It would be better for their bottom line. So I think it's useful, and I think it's interesting that MultiversX, that there's this move into payments, because you don't see this as strongly or as much of a focus on a lot of other layer one protocols. And especially when you're dealing with a protocol like MultiversX, which is so fast and scalable, that if they build in a lot of infrastructure for payments on the protocol itself, in addition to all these other kind of external things to help merchants make it more easy to accept it, that could be a good thing. That could set them up well. They also are just getting more into fiat payments themselves, so enabling fiat payments. And so really the thing you can kind of see going on with when you just look across this is this move to try to make this kind of payment app that has crypto rails as a part of it. And that's still very much an open space in the market. Not that there aren't competitors, there certainly are, but it still is relatively open. And if they can capture that, that would just be a very obvious place for adoption to come from. Now, the one thing about that can be, is a little concerning is that given that that is such a big thing that could become so big, one of the things I worry about a little bit with MultiversX is that they might be trying to do too much. That they have a lot of different things in their roadmap, which are kind of really hitting different markets quite differently. And so you might look at that and say it's a good thing because they're not putting all their eggs in one basket. They're really broadening out, trying to do a lot. But then the downside is that maybe they're not giving enough attention to the things that have maybe the most promise to gain adoption. And then they won't actually be able to capture that market as well as if they just mainly focused on that thing. So again, I'll leave it up to you to determine which approach is better. But that's just one of the things that I was thinking about, as I think about this, is that personally, I find this kind of payments area to be something that they're doing a lot more work in than a lot of other L1s, something that could really differentiate themselves. But I also hope that they're able to actually really do it and do it fully and not get too split across too many different things and not be able to push any one of them forward fast enough. So again, leave it up to you to determine how things are going on those dimensions, just something that I wanted to mention. Okay, so then what I wanted to talk about finally was some other things we can look at with adoption, kind of beyond that. Because really with that payments thing, it's something they're building, but still very speculative. So I want to talk also a bit about current adoption, what's going on. So one of the things I wanted to talk about a bit more was DeFi. That was a big value driver in the last bull market for alternative layer one protocols, people looking for alternatives from Ethereum, places that are cheaper to transact on. And MultiversX did reasonably well in that time. Currently, it sits at 20th on DeFi Llama in terms of its total value locked. But if we just look at the total value on it over time, we can see that it's really just been in a downtrend. Now, it's important to mention this is not exclusive by any stretch of the imagination to MultiversX. This has really been pretty much everything in crypto has seen a massive drawdown in its TVL. But it is something that's important to watch, in my opinion. So what I would really be looking at here with something like EGLD is, can it recapture market share in whenever the next bull market or the next DeFi bull market comes around? Because I think certainly TVL has been dropping here, whereas there's some other protocols that have really risen in the ranks, especially some of the layer 2s on top of Ethereum have seen a massive growth in their total value locked in DeFi. I think with MultiversX, you'd like to see that turn around as well, to see that as being a potential value driver. I'm not saying that DeFi is the only value driver by any means, and obviously EGLD could go a different direction. Maybe they really lean into the payments places we're just talking about. Maybe they really lean into the multiverse area, and that gains a lot of adoption, in the coming years. Who knows? A lot of things could lead to that. But this is one of the things that I personally would be watching in coming into the next bull market, of how it can perform. And then if it's just not getting adoption there, Is it gaining adoption elsewhere? And if it's not getting adoption in DeFi and it's not getting adoption elsewhere, that would be concerning in my opinion. So to kind of wrap things up, looking across EGLD, across these different dimensions that we have been talking about here. So on the supply side, it's, as I was mentioned, it's important just to keep in mind that the circulating supply now is much larger than it was before. Now, this is not as big of an increase as some other protocols I've seen, but it's also not nothing. And so just to keep in mind, we're in a different world now when it comes to EGLD. We're not in a world anymore where we have a circulating supply of 17.5 million. We now have 25.7 million. And it just means there's going to need to be more demand coming in to move price higher, especially to get back to some of these past prices, like the all-time high in the past. When we talk about adoption, I think we can see from example the current numbers of transactions on the network that the network just currently isn't being used a whole ton, and that's just the way it is. I know some people might not be happy to hear that, but it's just the reality. I'm just reporting the numbers. And so really when we're looking at something like MultiversX, which is really, especially how it's built into its determining its max supply and just frankly a lot of other things and how cheap the transaction fees are, for it to get to a place where it is sustainable and has transaction fees paying validators entirely, I think we're going to need a much larger use of the network. We're going to need more transactions, or at the very least, more expensive transactions to get to that point where transaction fees can make the network fully sustainable. And that's where I think watching some of these things, like can they really expand into the payment space and get people to use MultiversX as the crypto rails for that, not just using those services to pay with other crypto that are off of the network, specifically paying with crypto that's on the MultiversX network. That could drive a big increase in transactions and transactions per second on the network. And then, obviously watch some of the other things that they're going to be working on as well. And then also watch things like DeFi, because DeFi in and of itself brings usage to the network. You're going to be seeing a lot of transactions, a lot of money moving around if people are using it heavily for DeFi. Also, NFTs can be another thing to watch there as well. And so kind of broadly then, those are the things I think are going to be important to watch going forward, is that there's potential, there are things that are there that could happen, but it's also going to be a matter of actually watching and make sure they do happen. Because if they don't, that would not be a very great sign going forward. And so I think really with EGLD right now, it comes down to what do you think about those different factors. Now, obviously, none of this is financial advice. You should be making your own opinions about all of these things. And obviously, there are more factors to consider than just the ones I've talked about here. But those are some of the ones that I think are useful to watch for a protocol like EGLD to think about where it might be going next. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there.